As of the latest market close on August 5, 2026 at 4 p.m. Eastern Time, the U.S. stock market is currently closed, and KEEL Infrastructure Corp, trading under the NASDAQ ticker symbol KEEL, closed at $3.93 per share, marking an intraday movement down 2.24% from its opening level of $4.02. While casual market observers glancing at their retail trading dashboards see a volatile, low-dollar stock fluctuating within a narrow range, the underlying mechanics driving this price action tell a completely different story. Most retail traders on popular platforms looking at KEEL Infrastructure Corp assume they are holding a speculative cryptocurrency miner attempting a corporate rebrand to boost valuation multiples in a crowded market. The prevailing consensus across market forums and financial commentary is that this shift from bit farms to KEEL Infrastructure is merely a superficial pivot designed to boost valuation multiples in a crowded market. However, when you pull back the surface-level narratives and examine institutional order flow, power interconnect rights, and regional grid access, the reality completely upends that expectation. The market is pricing KEEL as if it is still a pure-play digital asset hashing operation exposed to brutal halving economics and fluctuating token prices. In truth, what is happening under the hood is a structured, asset-heavy transition into high-performance computing power distribution. KEEL Infrastructure is transforming its massive power queue capacity, over 2 gigawatts of grid-connected infrastructure, into raw computing real estate for artificial intelligence workloads across key North American energy hubs. This expectation versus reality disconnect creates one of the most intriguing structural setups in the entire technology and infrastructure landscape today. To understand why the market is mispricing this asset, you have to look directly at recent trading activity and volume dynamics. Over recent trading sessions, KEEL Infrastructure has seen elevated trading volumes hovering well above its 3-month average, with institutional block trades picking up noticeably during pullbacks near the $3.90 mark. While retail investors using Robinhood, the Robinhood app, or basic Robinhood stock trading features often sell on short-term crypto pullbacks, institutional desks using the Interactive Brokers platform, Interactive Brokers Trading, and Fidelity Trading platform are actively accumulating shares during these consolidation phases. The daily price swings reflect an ongoing tug-of-war between legacy retail shareholders who bought the original crypto mining story and strategic energy-focused funds that recognize the replacement value of multi-hundred-megawatt power interconnections. When major tech giants spend tens of billions of dollars competing for data center capacity, the true bottleneck is not silicon, server racks, or cooling units. The true bottleneck is physical electricity access and long lead time grid interconnect approval. Hyperscalers who power advanced machine learning clusters can't wait 5 to 7 years for utility commissions to approve new transmission lines. They need energized sites immediately. KEEL Infrastructure holds prime real estate with active high-capacity interconnects in power-dense regions like Pennsylvania, Washington, and Quebec. Market participants tracking NVIDIA stock, Apple stock, or Tesla stock understand that the physical hardware required for next-generation computing demands unprecedented electrical load capacity. While tech giants dominate news headlines, energy infrastructure operators like KEEL provide the fundamental backbone that makes those computations possible. Investors who manage their wealth using Schwab Intelligent Portfolios, Fidelity Wealth Management, or an individual brokerage account often search for exposure to artificial intelligence through high-flying mega-cap equities. Yet, the risk-reward calculation changes when you evaluate pure infrastructure plays trading at low relative valuations. When evaluating an investment or looking for investment help through online investment platforms, retail traders frequently overlook the land and power assets backing the equity. For anyone practicing self-investing through SoFi Invest, SoFi Active Investing, or Robinhood Investments, analyzing the balance sheet and real-world assets of a firm like KEEL reveals a massive discrepancy between market price and net asset value. If you examine the company profile and business structure, KEEL Infrastructure Corp, formerly known as Bitfarms Limited, was originally founded to build and operate large-scale data center facilities optimized for validation on public blockchain networks. Over time, management recognized that its most valuable asset was not the specialized mining hardware sitting on the racks, but rather the secured electrical power, substation infrastructure, and physical data campuses located in high-demand power corridors. Facilities across sites like Panther Creek and Sharon in Pennsylvania, Moses Lake in Washington, and Sherbrooke in Canada give the business a geographically diversified footprint with access to competitive electricity tariffs. Beyond raw hosting capabilities, the company maintains regional commercial electrician services and site management teams that lower operational overhead across their entire campus network. Please pause right here and leave a comment below. Do you believe traditional crypto miners will successfully convert their facilities into high-performance AI data centers, or will utility constraints prevent them from scaling? Drop your thoughts in the comments section so we can compare perspectives across the community. The institutional thesis surrounding KEEL hinges on its pivot from variable, low-margin hashing revenue towards predictable, long-term hosting and lease agreements with enterprise clients. In past quarters, revenue was directly tied to the price fluctuations of digital assets, leading to severe earnings volatility and depressed valuation multiples. Under the rebranded corporate structure, the goal is to secure long-term, multi-year power purchase agreements and compute hosting contracts that generate stable, recurring cash flow. When investors use SoFi stocks, or interactive brokers to buy into infrastructure businesses, they expect steady, utility-like returns paired with growth upside. If KEEL successfully executes the conversion of its gigawatt-scale pipeline into enterprise-grade compute hosting, its trading multiple could re-rate from that of a speculative asset to that of a premier digital infrastructure operator. Macroeconomic conditions also play a critical role in shaping the daily price action of KEEL stock. Macroeconomic conditions also play a critical role in shaping the daily price action of KEEL stock. Interest rate policy, energy sector regulations, and regional grid expansion plans all influence capital expenditures across the sector. Higher interest rates make project financing more expensive, which can slow down site conversions for smaller operators. However, because KEEL possesses an existing balance sheet with strong liquidity ratios and established utility relations, it holds a distinct structural advantage over early-stage data center developers who must build grid access from scratch. Traders managing portfolios on investing sites, Fidelity IRAs, or via the Fidelity mobile app must monitor how broader macroeconomic shifts impact infrastructure financing costs across North America. Looking ahead to the future outlook, there are distinct catalysts and operational milestones that will determine where this stock trades over the coming quarters. The primary catalyst is the formal announcement of enterprise hosting partnerships with high-performance computing operators or hyperscale cloud providers. Any binding agreement that secures long-term tenant commitments for their Pennsylvania or Washington facilities will instantly validate management's strategic pivot and force short sellers to rethink their positions. Conversely, the primary risk stems from execution delays in site retrofitting, power migration challenges, or regulatory hurdles related to cross-border power transmission between the United States and Canada. When evaluating online investing choices or deciding where to place capital using a SoFi robo-advisor, an intelligent portfolio, or interactive broker's account, context is everything. The expectation surrounding KEEL Infrastructure Corp was that it was a struggling legacy crypto miner rebranding to survive a difficult market cycle. The reality, backed by physical power queue holdings, strategic geographic locations, and massive gigawatt capacity, shows an asset-rich enterprise systematically executing a pivot into the highest demand segment of technology infrastructure. The current price of $3.93 reflects yesterday's narrative, while the strategic assets on the ground are positioned for tomorrow's computational demand. Understanding this gap between market perception and asset reality is precisely what allows disciplined investors to spot mispriced opportunities before the broader market catches on.